Hello, traders, my friends, and the NinZa.co family. I'm thrilled to be here today once again to share this exciting webinar experience with all of you. It's been a month since we last discussed Zephyrus Force and multi-instrument synergy. As always, let me begin by introducing ourselves for those of you who may not be familiar with us or are joining us for the first time today. We've got something really special and exciting lined up for you. First off, we understand that some of you may already know us, while others might be hearing about us for the first time. We're NinZa.co, a vendor offering a range of indicators, trading systems, and solutions designed specifically for traders. At this moment, we proudly offer over 170 products, supporting a vibrant community of more than 45,000 traders, with a total of over 100,000 downloads to date. Our journey in the market has spanned 10 years, during which we've gained invaluable experience and insights into what truly drives success in trading. I'm Harry Andrew, also known to many as Harry Lee, and I'm a member of the trading team here at NinZa.co. I'm the one leading today's webinar. The system I'm presenting to you today is our first ever order flow system, with a truly unique mechanism. This system carries the signature touch of NinZa.co creativity, innovation, and effectiveness. SpaceGPS satellite is our first order flow system, crafted with a deep investment of time and effort. The name itself suggests the ability to help traders map market movements and detect underlying trends in an ever-changing trading landscape. The system's volume analysis charts function like satellites orbiting the Earth, with price movements representing the dynamics of the Earth itself. It stands out with its dual-layer support and resistance zones, much like the Earth's atmospheric layers. These layers provide key price levels and offer deeper insights into market dynamics, helping traders make more informed decisions. Let's get started. First, let me introduce the key components of the system. The first one is the trend plot. I'm sure you're all familiar with its main purpose, confirming the market trend. What makes it special, however, is how we've designed it to be not just simple, but highly effective and visually clear, all packed into just one single plot. It's the perfect balance of simplicity and aesthetics, allowing you to easily identify the trend without any visual clutter. Moreover, as the trend plot moves, it serves as a guide, helping the system identify support and resistance zone in parallel with price movements. In an uptrend, the system focuses on finding support levels, while in a downtrend, it seeks out resistance levels. This makes it easier for you to identify key price zones without having to do the analysis yourself. Next, an essential and unique component of the system is the advanced volume analysis on candlesticks within the support and resistance zones. This analysis allows us to gain a deeper understanding of the interaction between price and volume, helping to assess the true strength of key price levels. As you can see, when the trend plot moves, it continuously searches for support and resistance zones, retaining only those that are still relevant and discarding those that no longer hold value. This ensures that the system remains focused on the key price levels. From there, the system looks for trading signals, particularly pullback signals, based on the volume analysis alongside the timing of price movements. First, the trend plot is designed and fine-tuned to perform multiple functions, providing value to you. Its interface is also professional and clean, ensuring a smooth and uncluttered user experience. The first special feature comes from the smallest details. The trend plot highlights its current position by flashing. This helps you stay focused on the current market and avoid unnecessary distractions. The second key feature is that the trend plot acts as a tool for the system's algorithm to identify support and resistance zones. In an uptrend, the system focuses on identifying support zone, and the trend plot serves as the link between these support and resistance zones, creating a unified structure. In addition, the trend plot serves as a boundary to determine the validity of resistance zones. Support and resistance zones are considered valid only when the price touches the trend plot. For instance, if a support zone doesn't touch the trend plot and it continues moving upward, that support zone will be automatically invalidated. Similarly, in a downtrend, the trend plot will turn pink to indicate a bearish market direction. At this point, the system will focus exclusively on identifying resistance zone, allowing you to pinpoint areas where price is likely to be pushed further down. Next, a unique role of the trend plot is to help you adjust your stop loss. The trend plot is specifically designed to detect flat or sideways phases in the market. When such a flat phase appears, it signals that the market may be losing momentum. At this point, you can move your stop loss to safeguard profits and reduce risk, ensuring a more secure trade. Thanks to its ability to provide highly reliable trends and advanced analytical algorithms, the trend plot allows you to adjust your stop loss dynamically and effectively. However, to make the most of this feature, I'd like to share a small but useful tip for safely and efficiently moving your stop. Instead of adjusting your stop as soon as the price moves near the trend plot, it's better to wait for the price to move a bit further away. This is crucial because when the price is too close to the trend plot, it tends to fluctuate back and forth between support and resistance zones, making it easier for the stop loss to be triggered. By allowing the price to move a safe distance and confirming the trend clearly, you can significantly reduce the risk of a stop hunt and protect your profits more effectively. Additionally, you can optimize your profits and fully leverage the power of the trend by adjusting your stop loss flexibly. This allows you to keep your position open for longer in a strong trend, avoiding the common mistake of closing positions too early, which often leads to missed opportunities for greater profits. By adjusting your stop effectively, you not only protect your gains but also capitalize on the continued movement of the trend, leading to higher returns over time. However, it's important to remain patient and closely monitor the trend's development to make the right and most effective stop adjustments. There is only one parameter when customizing the trend plot, and that is the trend period. This parameter determines the length of the trend that the trend plot will confirm. If you adjust the trend period to a higher value, the system will track longer-term trends, helping you monitor large and stable trends. On the other hand, lowering the trend period makes the system react more quickly to short-term fluctuations, allowing you to catch smaller and faster market movements. However, based on my personal experience, a trend period setting between 14 and 30 is the most suitable. This range provides a stable trend with minimal noise, which is perfect for the system to identify accurate and effective signals while avoiding false signals or unnecessary market fluctuations. Additionally, you can adjust from a selection of 11 different moving averages to have the system calculate the trend based on your personal needs. Next, we will talk about the dual-layer support and resistance zones, a special feature that we've dedicated a lot of time and effort to research and develop. This is a significant improvement compared to the typical support and resistance zones you might be familiar with. The mechanism of the dual-layer support and resistance zones is completely different. Instead of identifying a single support or resistance zone. To explain the dual-layer support and resistance, we have two distinct layers, the basic layer and the extreme layer. Each layer has its own role and characteristics, enhancing the system's ability to identify support and resistance zones accurately, depending on the phase of the trend. In an uptrend, the basic layer will be positioned above the extreme layer, meaning the basic layer will serve as a standard support level, while the extreme layer provides a stronger level of support. The extreme layer is specifically designed to offer a more robust support and resistance zone compared to the basic layer. A unique feature of the dual-layer support and resistance zones is that they are drawn in real time, rather than relying on past data like traditional support and resistance zones. Specifically, the system analyzes price action at the present moment and proposes support and resistance zones that are likely to influence future price movements, continuing throughout the price's journey. This approach allows the system to generate important price levels immediately, without waiting for price to revisit previously established support and resistance zones, as traditional methods typically do. Identifying support and resistance zones at the current price level not only helps you confirm trading signals earlier, but also gives you more control over your trading decisions without waiting too long. This allows you to capitalize on trading opportunities while they are still forming, and reduces the risks of trading when the price has already moved too far. That's the first benefit of defining the dual-layer support and resistance. And the second benefit is that it provides you with a safety level to place your stop. Imagine, without the extreme layer, you would have to place your stop below the support zone in the usual way when opening a buy position. In this case, your trade is highly susceptible to a stop hunt, where the market deliberately adjusts the price to trigger the stop losses of other traders. With the extreme layer, you can place your stop at a safer and more optimal level, closer to the extreme layer, where price fluctuations may be more substantial and less likely to be hunted. This helps reduce the risk of stop hunts while maintaining the safety of your trades. Thanks to this stronger support layer, you have the opportunity to hold your trades longer without worrying about unnecessary stop-loss triggers. The two-layer support and resistance zones are particularly well suited for implementing dollar-cost averaging, DCA strategies, because they provide a solid and clear structure for identifying key price levels throughout the market's movement. With DCA, you split your investments into multiple smaller purchases at different price points over time. This pairs well with the dual-layer support and resistance because the basic and extreme layers offer strong, reliable support zone, helping you pinpoint effective entry points when executing DCA. For example, when the market retraces and approaches the support zone, you can make buy entries at lower prices, while still ensuring safety due to the strong extreme layer. This helps minimize risks from short-term price fluctuations, while allowing you to continue investing at attractive prices without fear of being stopped out. Furthermore, DCA requires patience and discipline in managing investments, and the dual-layer support and resistance makes it easier to identify important price zones, allowing you to make buy decisions at the right time and avoid entering when the price has already surged. The extreme layer further enhances the validity and reliability of these support zones, helping investors implement their DCA strategy more effectively and safely. So, how do we adjust the settings for this support and resistance zone? We have two parameters to adjust the basic and extreme zones. The fast period will relate to the basic zone. The larger this parameter, the wider the basic zone will be, and conversely, the smaller this parameter, the narrower the basic zone will be. And the slow period will relate to the extreme zone. The larger this parameter, the wider the extreme zone will be. Conversely, the smaller this parameter, the narrower the extreme zone will be. These are the two cycles used by the system to calculate the price cycle from the current price level. The fast period should be greater than the slow period. Before we move on, free. Next, the feature that makes this system stand out the most is its ability to analyze trading volume to propose pullback signals. Volume is a critical factor that many trading systems often overlook. But in this system, volume is analyzed in detail for each individual candle, offering a clearer picture of market participation. The key point here is that the volume analysis is clearly displayed directly on the chart, allowing you to track the level of trading activity in each phase of the price movement. What sets this apart is that the trading pullback signal is only generated when the candle enters key support or resistance zones, and only after volume is analyzed within these zones will the signal be proposed. This allows you to identify the real participation of buyers and sellers in a particular candle. By combining volume analysis with price action, you gain a more comprehensive view of the market trend, enhancing the reliability and effectiveness of the trading signal. With this volume analysis method, the system helps you better understand the actual flow of money in the market, rather than relying solely on price action like traditional systems. This not only helps you identify signals with higher accuracy, but also minimizes risks, as you are considering the real participation of market forces, not just price. Additionally, the system continuously analyzes trading volume throughout the price movement and only proposes signals within support and resistance zones. This prevents volume traps, where the market generates false signals or noise, leading you to make wrong trading decisions and suffering unnecessary account losses. One special feature within the system's volume analysis capability is the advanced volume analysis on each individual candlestick, combined with price action analysis. You can compare the differences between the upgraded volume analysis we offer and regular volume analysis. So, how do they differ? First, let's talk about the ability to analyze price action. We categorize candlesticks into 3 types: neutral candles, bullish candles, and bearish candles. A neutral candlestick is one where the closing price is positioned in the middle of the entire range of the candlestick. Next, a bullish candlestick is defined as one where the closing price is positioned above 50% of the total range of the candlestick. A bearish candlestick, on the other hand, is defined as one where the closing price is positioned below 50% of the total range of the candlestick. For a candlestick to be considered as having significant buying volume, it must meet 2 criteria. First, its volume must surpass the average volume threshold set by the user. Second, the candlestick must close as a bullish candle, as defined by the algorithmic rules I mentioned earlier. Conversely, for a candlestick to be considered as having significant selling volume, it must meet the opposite criteria. Its sell volume must exceed the average volume threshold set by the user, and the candlestick must close as a bearish candle, according to the algorithmic rules outlined earlier. Especially if a candle has extremely high volume, but is a neutral candle, with a close price in the middle of the candle's range, it will be displayed as a yellow volume bar. This indicates a battle between buying and selling forces within that candle, with no clear trend. Additionally, the white volume bar represents candles where the volume does not exceed the average threshold. Even if the volume exceeds this threshold, if the candle is neutral, it will not be considered as a candle with significant buy or sell volume. By doing so, the system ensures that signals are only generated when there is clear confirmation from both price action and volume. You don't have to worry about weak signals or market traps, allowing you to focus only on reliable trading opportunities with a higher potential. This continuous volume analysis helps you understand the real participation of buyers and sellers, enabling more accurate trading decisions and protecting your account from unwanted situations. Free. Next, we have the signal that alerts you to strong buying or selling pressure within each candle. This signal is carefully crafted by incorporating both types of volume analysis, accumulation volume and volume delta, to accurately identify and highlight these pressure points. First, let's focus on candles with a green triangle warning signal printed on the system. These signals indicate that buying pressure is increasing. To identify this, the system first checks if the candle has the highest buying volume within the range of previous candles. Then, it must also have a positive delta volume. Only when both conditions are met will the system propose the strong buying pressure warning signal on the chart. As these signals continue to appear, you can gain confidence in the strength of the buying pressure, allowing you to maintain your long position with greater conviction and hold it for an extended period. On the other hand, for sell warning signals, the system identifies candles with the highest selling pressure compared to the preceding candles. These signals are displayed with a pink triangle, indicating strong sell pressure. To activate this, the system looks for candles with the highest volume of selling activity, accompanied by a negative delta volume, ensuring that only significant sell pressure is highlighted. When these signals appear consistently, it indicates increasing strength in sell-side activity, giving you confidence to hold or enter short positions, knowing that market sentiment is leaning heavily towards selling. Additionally, when these sell signals appear alongside strong buying signals, it can suggest the potential for a trend reversal. To apply these warning signals in your trading, first, in an uptrend, when a bearish strong momentum signal appears, you should consider closing your buy position at that moment to lock in your profits. This helps safeguard your gains before any sudden market fluctuations that may reverse the trend. By responding to these signals, you can protect your capital and avoid being caught in unexpected market shifts. Alternatively, in an uptrend, you can adjust your stop using these strategies to minimize risk while ensuring a certain level of profit. By trailing your stop along with the trend, you can lock in profits as the price moves in your favor, while also allowing room for the price to fluctuate without prematurely closing your position. This approach helps manage risk and optimizes your profit potential as the market continues to move. Conversely, in a downtrend, when a bearish momentum signal appears, you can move your stop to these candles to protect your profits and limit risk. If you are a trader who enters multiple contracts within a single trade, you can also look to take partial profits at these candles with strong momentum signals. This allows you to lock in profits incrementally while maintaining exposure to the trend, effectively managing both risk and reward. Finally, in a downtrend, when a bullish strong momentum signal appears, you can look to close your sell position at that moment to secure your profits at a high level before any sudden market fluctuations. Next, let's move on to an equally important part, backtesting the system on the NASDAQ and S&P 500 with a period of up to 1 year. First, for the NASDAQ, we conducted a backtest over a period of 1 year, ending on November 8, 2024, which is the most recent date. Next, the time zone we used for the backtest is Central America. Next, we will use the HelloWin software to conduct the backtest, and we have fully added the commission fees to the backtest strategy to ensure that it is as realistic and accurate as possible. Next, for the backtest setup, I will backtest with the pullback signal as the primary trading signal in the system. The signal code for a buy signal will be set to 1, and for a sell signal, it will be set to 1. Plus, first of all, I'd like to clarify that this is a semi-automated system. The results we share are based on backtesting with fixed stop target levels, which cannot be adjusted during the backtest. However, in real trading, you have the flexibility to manually close positions or adjust your stop levels, and you can apply risk management strategies to improve your win rate. The results we provide reflect the system's performance over a full year, not just a few days of scalping. This will give you a broader perspective on the system's long-term effectiveness. Lastly, in trading, when you accept sacrificing a bit of win rate, you can achieve much larger reward, compared to the risk. This approach allows you to stick with a strategy long-term while minimizing risk. However, if you focus too much on win rate, you may end up increasing risk, and a single losing trade could significantly impact your profits. This is a key principle when backtesting and developing automated strategies. I hope these insights help clarify things for you. Thank you again for your trust in us. We're always here to support you. And here's the setup for testing the sell signal. And run. Through an overall analysis, accumulated profit, $156,680. Max drawdown, $18,000. With a max drawdown to profit ratio of 1.9, meaning the maximum capital drawdown risk is only 1/9 of the total accumulated profit, this highlights several key points. Safe strategy. The low risk and high return reflect a well-designed capital management strategy. Strong resilience. Minimal losses paired with substantial cumulative profits indicate the strategy's robustness and ability to recover easily while continuing growth. Reduced psychological pressure. Investors experience less stress from losses, which supports discipline and patience with the strategy. Profit factor, 1.21. This indicates the strategy's profitability, with 1.2 being a stable ratio for sustained gains. Risk-reward ratio, 372.1. On average, the profit is 3.72 times the risk. With a risk smaller than reward setup, investors can limit the maximum loss per trade, protecting capital effectively. This allows investors to stay emotionally balanced, knowing that one winning trade can offset multiple losses. Additionally, the high potential for profit means that each win generates substantial gains, accelerating capital accumulation quickly. The results have fully accounted for commission fees, so you can trust in their accuracy and realism. Next, we'll conduct a backtest on the S&P 500 using the same setup as the NASDAQ test, with the primary trading signals focused on pullbacks. The only adjustments will be to the stop and target levels. Once again, we want to emphasize that this is a semi-automated system. The backtest results use fixed stop target levels, but in live trading, you can adjust your stop loss and take profit levels manually, as well as apply risk management to improve the win rate. The backtest was conducted over an entire year, allowing you to assess the system's long-term effectiveness. However, in real trading, the ability to dynamically adjust stop target levels can yield even more impressive results than fixed settings. The profit chart for S&P 500 also shows a steady upward progression over the span of 1 year. Accumulated profit 74,725, max drawdown 14,475, with a max drawdown to profit ratio of approximately 1.5, meaning the maximum capital drawdown is only about 1/5 of the total accumulated profit. This highlights several key points. Safe strategy. The low risk relative to total profit reflects an effective capital management strategy. Strong resilience. The relatively small drawdown paired with substantial cumulative profits indicates the strategy's robustness and ability to recover easily while maintaining growth. Reduced psychological pressure. A lower drawdown helps investors experience less stress during drawdown periods, supporting discipline and patience with the strategy. Profit factor 1.19. This profit factor indicates that for every $1 of risk, the strategy generates 1.19 in profit, showing stable profitability, albeit not excessively high. This is a moderate ratio suitable for sustainable gains. Risk-reward ratio 2.91. With a risk-reward ratio of 2.91.1, the average reward per trade is about 2.91 times the risk. This limits maximum loss per trade while allowing for significant profit potential. Conclusion? Effective long-term strategy. Although the win rate is low, the high risk-reward ratio, combined with a positive profit factor, indicates that this strategy has the potential for sustained profitability. Emotional balance in trading. Investors can remain confident and disciplined, as the high cumulative profit relative to drawdown reduces psychological pressure during drawdown periods. The results have fully accounted for commission fees, so you can trust in their accuracy and realism. Now let's focus on real-time trading, where we're not relying on playback but actively participating in the live market. For my first trade, a buy signal appeared as the price was progressing within an ascending price channel, suggesting the potential for the uptrend to continue. To further strengthen the signal, the price broke above a key short-term resistance trend line, signaling a solid confirmation that the uptrend was likely to persist. At this point, I took the opportunity to enter the trade, as both the price channel and the breakout reinforced the bullish momentum. After entering the position, I adjusted my stop loss according to the strong bullish momentum signal that emerged above the market. This adjustment allowed me to lock in profits while managing risk effectively. As the trade unfolded, I continued to monitor the price action closely, and once the market hit my target, I closed the position with a profitable outcome. This approach, leveraging real-time market conditions and sound risk management, proved to be a successful strategy for executing the trade efficiently and securing profits. Next, let's look at a sell trade. In this case, the initial sell signal occurred after the price broke below a descending trend line. However, I decided not to enter the trade right away. I waited for the price to break through the trend plot 1 and the ascending trend line once more to confirm whether the initial breakout was a false signal. Once the price broke through, I evaluated the breakout as a potential fake, meaning it could be a temporary move before the trend resumed. At this point, a strong bearish momentum signal appeared, confirming that selling pressure was increasing. This was a clear indication that the market was more likely to continue moving down. I entered the sell position at the exact point when the bearish signal confirmed, and the trade was profitable. By waiting for confirmation and using the momentum signals, I was able to avoid entering a potentially false breakout and instead capitalize on the stronger downward movement, securing a successful trade. Next, let's look at a sell trade on the ES 3-minute chart, which turned out to be a relatively long trade. Initially, my trade didn't follow the expected direction, and the price broke through the trend line, which could have been concerning. However, by placing my stop at the 2-layer support zone, I ensured that my stop loss was well protected. Even though the price broke the trend line, it didn't continue to move downward. Instead, the price began to consolidate. This signaled a potential fake breakout, which is a crucial sign in my strategy. As anticipated, the price reversed upward, proving that the breakout was false, and it eventually hit my target, allowing me to close the trade in profit. The key factor that allowed me to hold through this uncertainty and still come out on top was the 2-layer support zone, which provided a safe place to set my stop loss. This not only protected me from unnecessary losses, but also gave the trade enough room to breathe and reach the target. This is a perfect example of how the 2-layer support mechanism helps to manage risk while maximizing profit opportunities. I would like to emphasize that all the trades I've discussed were real-time transactions, not playbacks. I solely relied on the SpaceGPS satellite system combined with my personal experience to execute these trades. Next, I entered another trade on the 100-tick chart for NQ. After opening the buy position, the bullish strong momentum signal was continuously triggered, indicating a strong buying momentum, which gave me the confidence to hold on to the trade. Eventually, when the bearish strong momentum signal appeared along with a down engulfing candle, I proactively decided to take profit and lock in the gains.